Assalamualaikum and good day to everyone. We are from Group 4 and we will be discussing about the implementation of Malaysian Public Sector Accounting Standards in a specific government agency. Our first slide is about the introduction of MPSAS, or we call as Malaysian Public Sector Accounting Standard, that were developed and issued by the Accountant General Departments of Malaysia, or known as AGD. These standards are designed to enhance the quality and comparability of financial reporting in the public sector. Next is the timeline of the adoption. The Malaysian government decided to adopt a crucial accounting in 2011. The target was full implementation by 2015 for the federal government and 2016 for the state government. However, due to the various challenges, the timeline is for the implementation delayed multiple times, ultimately targeting 2022 for the federal government and 2023 for the state government. MPSAS are based on the International Public Sector Accounting Standards (IPAS). MPSAS are based on the International Public Sector Accounting Standard with a minimal modification. This is ensure alignment with international practice unless specific local issue necessitates changes. AGD also strongly encouraged the adoption of MPSAS by all non-commercial public sector entities such as social welfare organizations, regulatory bodies and agencies, public universities and educational institutions, and so on to further enhance the financial reporting equality and transparency. Learning from international experience. To guide Malaysian implementation, there are ongoing studies are being conducted on the experience of other countries with accrual accounting. This international perspective provides valuable insights and lessons learned for implementation emphasis in the Malaysian public sector. Since emphasis are based on the IPSAS, MIA nominated the former Accountant General to the International Public Sector Accounting Standards Board. MIA also appointed a technical advisor to learn from countries like Australia, Canada, Morocco, New Zealand, Switzerland, and the UK, which have already implemented international public sector accounting standards. MPSAS applies to sector entities that deliver service for public benefit and finance through taxes, transfers, social contribution, debts, or fees. This includes the federal government, state government, and local government. MPSAS adoption gives some benefits such as the adoption of MPSAS enhance the quality of general purpose financial reports. It's improved public finance management leading to better informed resource allocation decision. Additionally, it's increased transparency and accountability and also ensure standards remain up to date and relevant in the globalized financial landscape.
Hi and Assalamualaikum. I am Irdina Madihah and I will explain about the differences between the current accounting practices and the requirements of MPSAS and the difference between MPSAS and IPSAS. As we all know, Malaysia's current accounting practices for the public sector primarily follow the Malaysian Public Sector Accounting Standards, which is MPSAS, which influenced by international standards like IPSAS. However, many still use cash-based accounting, which records transaction only when cash changes hands, leading to delayed recognition of financial information. Second, MPSAS emphasizes accrual accounting, recording transactions when they occur. This approach provides a more accurate financial picture by recognizing liabilities and assets as they incurred. Third, MPSAS is adapted from IPSAS but tailored to Malaysia's legal and regulatory needs. This makes the standard more relevant and practical for local authorities or entities. Fourth, MPSAS allows for a flexible transition from cash-based to accrual-based accounting. This phased approach helps entities or authorities gradually build the necessary capabilities for full compliance. Lastly, MPSAS is managed by the Accounting General Department of Malaysia. This ensures the standards align with national priorities and also for timely updates. keeping them dynamic and responsive to local needs. Next, I am going to explain about the process of developing new accounting policies that are compliant with MPSAS. First, start with an initial assessment. We need to understand MPSAS requirements and evaluate existing policies to identify gaps. Second, move to policy formulation. We can start by making draft or revise existing policies to meet MPSAS standards, ensuring they are clear, comprehensive, and also practical. Third, engage in stakeholder consultation. This involves financial managers, accountants, auditors, and other relevant parties to gather feedback and address concerns, making policies more effective and acceptable. Fourth, focus on implementation planning. We can create a detailed plan with timelines, resources, and training programs to ensure a smooth transition. Lastly, emphasize review and feedback. We have to monitor the implementation, gather feedback, and continuously adjust policies to maintain compliance and effectiveness. So now, I will explain about how government agencies adopt the Malaysian Public Sector Accounting Standards (MPSAS). This transition involves significant changes to systems and processes to shift from cash-based to accrual-based accounting, providing a more accurate financial picture. First, agencies need to upgrade their accounting system. Traditional cash-based systems are enhanced or replaced to support accrual accounting, integrating modules for accurate recognition, measurement, and reporting. Second, re-engineering processes is crucial. This means redesigning processes to capture financial events in real time, developing new procedures for recognizing revenues, expenses, and managing assets and liabilities. Third, extensive staff training is essential. Training programs cover various aspects of MPSAS, ensuring personnel have the skills and knowledge to operate new systems and follow updated processes. Fourth, enhancing internal controls is critical. Strong controls are established to ensure the accuracy and reliability of financial data, including transaction recording, account reconciliation, and financial statement approval. Fifth, engaging stakeholders is vital. Regular communication with management, staff, auditors, and regulators ensures everyone is aware of the new requirements and can provide feedback for compliance. Lastly, continuous monitoring and improvement mechanisms are set up. Regular reviews and assessment identify issues and areas for improvement, ensuring the agency remains compliant with MPSAS and continuously improves its financial reporting practices. In summary, adopting MPSAS involves upgrading system, re-engineering processes, training staff, enhancing control, engaging stakeholders, and continuously monitoring and improving. These steps ensure a smooth transition to more accurate and comprehensive financial reporting.
Hi, Assalamualaikum. My name is Siti Faizah Binti Kamarudin, and I would like to talk about the risks and challenges of implementing MPSAS among the federal statutory bodies of Malaysia, also known as FSB. For example, as Bank Negara Malaysia, Malaysia Industrial Development Authority, which is MIDA, Securities Commissions, Malaysia Communications and Multimedia Commissions, MCMC, and also Companies Commission of Malaysia. So first of all, recording proper opening balances of all account with assets being a significant issue. This challenge arises from records that has been prepared from prior accounting practices that do not include industry MPSAS reporting standard, which means that it may be possible to have records that are inaccurate or overvalued. This means, therefore, that there is a likelihood of asset being stated at lower value than their true values in the financial statement, and this leads to an overall distortion of the combined financial statement and also thereby result in the impairment of decision, the imprecisions of report, and also the general management of total financial statement. So next is, it is also understood that FSBs could face several difficulties related to data collection during the implementation of the MPSAS. This is procedural endeavor which involve a sequence critical action directed toward ensuring accurate referencing. First, FSB have to carefully identify and prove the existence of all the assets which, however, require exhaustive physical examination of the assets and document review to ensure a proper sound recording of all the assets. Likewise, legal research followed by record review and analysis involve significant efforts to establish the actual legal and beneficial owner of each asset, to identify rightful title and actual beneficiary. The verification of ownership is a great significant pursuit to the fact that it has significant impact on the recording and presenting of assets in the financial statement. Any lack of office in correctly performing these procedures may lead to the generation inadequate to wrong information, thereby causing overstated and understated financial statement. So, on the other hand, while in the course of complying information to update opening balances, the FSB may encounter challenges and docket related to the accessibility and comprehensive of the data. These data are used in computations that help determine the relative value of various assets and therefore the foundation of financial statement. While implementing MPSAS, FSB may be faced with the situation whereby some established organizational policies and procedures thrown out in Treasurer Circular or General Manager Circular, which may be in variance with MPSAS. As such, when faced with such a conflict, FSB are forced to treat a fine line between strict conformity to internal processes and procedure on the one hand, whilst implementing the said new standard on the other. Next, there are some problems which FSB might face in the process of consolidation of financial statement. For example, due to the differences in the adopted standard accounting by the subsidiary. The independent application of accounting standard across subsidiary may also cause the group's consolidation to be painful and reduce the ability to portray the position of the group, which it represents. So upon considering the opinion from AGM, which is Attorney General's office, there is need to maintain consistency with the accounting standard that apply in the holding company. This is so since most cases of various activities that the subsidiary undertakes can be harmonized with those of the holding company, thus making it easy to have a proper consolidation, and in the process having an overall picture that depicts the financial position of the group adequately. So last but not least, the possible elimination of the earlier implementation of mandatory reporting based on the accurate accounting and the MPSAS, together with the ignorance of the actual implementation time, yield fatigue among the accounting staff. It compromises disciplines and organization through altering specific planning and preparations, while increasing the stress level of the staff involved due having to alter the schedule and expectations frequently. Also, the fact that employees who underwent training earlier in anticipation for the implementations also must undergo retraining. This can put the further pressure on the companies. Furthermore, the adoption of accrual accounting at the state government level is hampered by a shortage of competent and experienced accountant. That is, the absence of professional staff often slow down the transition process of simply prevents the implementation of the accurate accounting policies. That's all from me. Thank you.
Assalamualaikum, my name is Abdul Haqim and I'll be presenting about the benefits of implementing Malaysian Public Sector Accounting Standards, or called MPSAS, in a specific government agency. So one of the primary benefits of implementing MPSAS is the improvement in financial reporting and transparency. MPSAS requires agencies to produce comprehensive financial reports that provides detailed information on assets, liabilities, revenues, and expenses. This level of detail promotes greater transparency, allowing stakeholders, including the public and oversight bodies, to have a clearer understanding of the agency's financial health. Enhanced transparency is crucial for building trust and ensuring that public funds are managed responsibly. Another significant advantage is the enhanced performance evaluation that MPSAS facilitates. By providing detailed financial information, MPSAS allows for better performance and assessment and comparison across various units and departments within the agency. The capability is essential for identifying areas of inefficiency and implementing improvements. Next is MPSAS also contributes to better cost control and resource allocation. Detailed financial data enables agencies to track expenses meticulously, manage budgets effectively, and allocate resources where they are most needed. This ensures that financial resources are used efficiently. And next is the efficiency of financial processes is significantly increased with the implementation of MPSAS. The accrual accounting system provides timely and accurate financial information, simplifying and speeding up financial operations. This leads to faster decision making and more efficient management of the agency's financial activities. Furthermore, MPSAS implementation helps reduce fraud and corruption risk by promoting transparency and accountability through detailed financial records. MPSAS makes it more challenging for fraudulent activities to go undetected, while accurate financial reporting ensures that any discrepancies of irregularities are quickly identified and addressed. So that's all from me. Thank you.
In conclusion, implementation of Malaysian public sector accounting standard within specific government agency marks a significant step towards improved transparency and accountability in financial reporting. Despite challenges such as the need for strong top management support, adequate IT infrastructure, and comprehensive staff training, the transition to MPSAS offers numerous benefits. These include enhanced financial reporting, better performance evaluation, increased efficiency in financial processes, more effective cost control, and reduced fraud risk.